Okay, so let's look at a bit of market structure. All right, so let's say this is a H4 time frame, right? And we had price come and hit a daily bullish order block here. Okay, price come and hit a daily bullish order block, and as soon as it hit the daily bullish order block, it broke market structure. When this happens, okay, this low here is considered as a it's considered as a strong low. Let me put that word as a strong low. Why is it a strong low? It's because it's coming off from a PD array. So this is a daily, it could be a daily fair value gap, it could be a daily order block. Okay, this low here is considered as a strong low, and for price to place in a strong low, there is going to be a lot of liquidity built below this low. Okay, there's going to be a lot of liquidity built below this low. What do I mean by liquidity? When price hit the PD array, the daily order block, and price pushes away, there is going to be institutional sponsorship, i.e. there's going to be some institutional buying. So when the institutions buy, what's going to happen? They're going to keep their stop loss here. Now, we as smart money traders, we are tracking them. So don't think that in some institutions they don't get stopped out. They do get stopped out. Okay, so when we buy and we leave our stop loss here, what is going to happen? Institutions stop loss are going to be there. There might be other institutions because the market is not traded by just one institution. There might be other institutions that might want to go long, but because they have a vast amount of orders that they want to, put in the market, chances are they can't get it filled. So what they want to do is they want to go for where logical level of liquidity is going to be built, right? And if you look closely, where is it going to be residing? Below this low, because that's where anyone that bought long, if they bought 100k to go long, they have 100k to go short down here, because that's what they want to use to get out. You can't buy 100k. Okay, you can't buy 100k and then use 10k as a stop loss. That's not going to work, right? So whatever you use to buy, you're going to use that same amount to get out. So your get out trade is going to be exactly the same size as your entry, right? And also, because you have a lot of money, that's what they want. Okay, so then they're going to invest money into driving price down here before taking it up again, right? So I want you to understand market structure this way. Whenever price makes a new low and it starts pushing up, if that low, okay, is something like this, okay, that's exactly the one that we want to be buying, right? Because that's the one that will create the order block. So this low, you want to pay attention to it, because if price happens to take the low out here again, okay, that is going to inject liquidity in the market, and then price will go up. So let's say price does this and then it goes up. Okay, when it does this, then obviously potentially what is going to happen is majority of people will not leave their stop loss here. They will leave it right here. Okay, we call this one engineered low. Okay, it's an engineered low that if price starts coming back down, it can take this low out, hit another block, and then go up, right? So what you need to be aware is when price is going up and it's making highs and lows, pay attention to the lows that it's making, because if price is bullish and it's going up, chances are they are going to look to take out a specific low. Mostly it's going to be this form of low, but it probably be in the lower time frame. So if this is the H4, this low might be in the 15 minutes time frame that they might take, but on the hourly it might look something like a normal low. Okay, it might be something of a normal low that price will attack and then continue going up, right? And then the same thing is for a sell. When price hits a bearish order block, always make sure you are paying attention to the highs, especially these kind of highs when it's going down, because when it's going down and it builds this kind of highs, this is where smart money, or quote unquote some institutions, this is the high their stop loss are going to be residing. Why? Because this is where an order block will be and the drop will happen there. So it will be basically smart money or an institution that sold there, and if institution sold there, your stop loss is going to be above there, and that's what the market is looking for. Okay, and to show you example of how it actually looks like, let's go into some price action and then show you how it looks like. I'm gonna use UK 100 for a trade that I took on Friday. I'm not Friday, I took this trade on the 5th, on Thursday, and price never went to my TP until yesterday after taking out the low. Okay, so if you look closely here, that was the order block, right? Now if you pay attention, it's exactly the pattern that I drew right here, this one here, right? So we have a low, a lower low, and then we broke higher. We have a low, a lower low, and then we broke higher. So that is gonna give you the order block, which is this one here. And then I was expecting price to go and attack this equal high. Okay, I was expecting price to go and attack that equal high. Now look what price did, because what price did after is what I want you to pay attention to. Notice the push away from that candle, right? That is institutional, because it gave a big push away. Now price came back to it and then just went sideways, 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 and finally on Monday they did take out that low. But look what happened after they took that low out. What happened? Boom. So what was the main reason why price did this? Right? What was the main reason why price did this? And that's basically what I just gave you theoretically. It's because there will be stops that will build below this low. That is not going to be just normal stops. It's going to be institutional. It's going to be people with big money, okay, because they invested interest in here, right? So their stop losses is going to be below this low. And then guess what? Price was that particular one before going up. Yeah, price won that particular low before going up. Hence, what did price do? Play around, and then zap, take this low out, and then went up. So if I was still long, luckily I did close my trade on, I think, on the 6th, up in here, when I was about to leave for my holiday, Friday, I'm not sure what time. Sorry, was it Friday? Thursday. Yeah, Thursday. When I was about to leave for my holiday, I closed it, right? Because I didn't want to be in that trade, because it should have gone to my TP. And the fact that I didn't do that, I was like, okay, I think they're playing around usually. And again, over time, you're gonna get that experience. When you take smart money trades, they should respond immediately. If they don't respond, close the trade, because chances are they will take you out. Okay, if you have any trade and you're looking at an order block, fair value gap, whatever you're using to get into the trade, if price gets there and it starts playing around like that, close the trade, because chances are this is what is going to happen. They will be taking you out before going, right? But it will come to you as experience over time. It won't be you're not going to understand it straight away. You have to go through lots and lots of pain for you to start seeing it. So for example, here, that was another one. Okay, that order block, big push away. What happens? Comes back. It should go and make a new high. Fail to do that, boom, they take that low out. And then after taking that low out, what happens? Price shoots away. See if I can find an example. Here, right, another block, price shoots away, price comes back, doesn't respect it, takes out the low, and then the move happens, right? Let's see if I can find another one. There's another one here. Order block, price pushes away, they don't go up, they take this low out, right, and then push away. Okay, it's not easy to spot them, but just be aware when you are buying an OB, and as soon as you buy and price does not move in your favor, right, and price does not move in your favor, then you are mostly seeing something like that. Let's check Euro New Zealand, because I was anticipating something like that anyway. Yep, I'm actually anticipating something like that here. You can see I have a buy down there. I'm anticipating something like that to happen, where they will take out that low and then push up. Okay, so I'm watching Euro New Zealand for that. So I'm watching this level here. That's the level I'm watching. Okay, so you can watch that. Now, how do you trade it? That's a different thing altogether. You have to wait for, because once that happens, it's gonna create a new order block, right? Once that happens, it's gonna create a new order block from away from the one that has been traded. So here, takes this one out, it will create a new order block. Where was the other one? Here, it takes this one out, it's gonna create a new order block. Okay, so if you wait, here it takes this one out, it creates a new order block. Here it takes this one out, it creates a new one. So if you just wait for, once they take it out, you wait for the order block to form, then you can look to start buying, because there's nothing that guarantees that it's gonna go up until it creates the order block. So once the order block has been created, then you can start looking for the buy, because once that happens, that's when I think the institutions will now take price back up into where they want to take it. Okay.